Your gross profit percentage is the most important number of every financial statement because that tells you, are you pricing right? And if you know your gross profit on a customer or a job, now then you can go into an accounting system and start adding fields based on the decisions you got to make.
You work hard in your business. On the Profit by Design podcast, we ask the big question. What has your business done for you lately? Hi, I'm Dr. Sabrina Starling, the business psychologist, the author of How to Hire the Best, and your co-host on the Profit by Design podcast. Weekly, my co-host, Mike Bruno, and I bring you tips, tools, and strategies from our own experiences and from the experiences of our guests, who are entrepreneurial thought leaders and real-life entrepreneurs, all to support you in making intentionally profitable and sustainable business decisions to live the lifestyle you desire. At Tap the Potential, we know that you want to be freed from the constant demands of your business. In order to do that, you need a business that supports your life. The problem is you have a cash-sucking business taking over your life, leaving you frustrated and discouraged. We believe work supports life, not the other way around. We understand you're paying a team and you're still having to do it all. There should be accountability. It shouldn't be this hard, which is why through our proprietary coaching system, we help thousands of business owners just like you have more time for what's important to them and grow profit by 300 to 800%. Here's how we do it. First, take our assessment at tapthepotential.com/assessment. Next, meet with our success team lead to debrief your results. Then, join our Better Business, Better Life program. By the end of your first year with us, you will have more time for what matters to you and more money in your bank account than you've ever had before. So take our assessment at tapthepotential.com/assessment so you can stop working so hard for so little return. Take your life back. Profit designers, today we are going to get into a illuminating discussion around pricing and the question of should you discount? We have Stephen King with us. He has been a top executive at a Fortune 500 company, a Bootstrapped CEO, and a venture-backed tech startup founder. In addition, he's done nonprofit fundraising, and it's safe to say that Stephen is not your traditional CPA. Stephen is president and CEO of GrowthForce, one of the nation's largest providers of outsourced bookkeeping and controller services. Regarded as an industry thought leader by AICPA and CPA.com, his ability to visualize the future of accounting has led GrowthForce to become one of the fastest growing companies in America. His experience at the forefront of technology development and accounting system design spans nearly 3 decades. In 1995, he founded Virtual Growth, the nation's first cloud-based accounting service, and quickly grew it into a market leader. After being acquired by Insperity, Stephen was brought on as president of Insperity's Financial Management Services division, serving 2 years before leaving to build GrowthForce. He also spent 7 years working at Amnesty International USA, first overseeing 300% growth as CFO, then raising over $20 million a year as Director of Development. Stephen's time at Amnesty reinforced his lifelong commitment to giving back to the community. As a result, nonprofits represent 35% of GrowthForce clients. So with that, let's join our conversation with Stephen. Profit designers, at Tap the Potential, we are on a mission right now to be a positive force in social media during trying times for all of us entrepreneurs. In that regard, I would love it if you could help us out. We really want to get behind any of you who are doing good things in your communities, showing up and leading with love. If you are doing something to keep your team together during this time and you're sharing it in social media, or you come across another entrepreneur who is being a gift from their gift in some way that you notice, please use the hashtags Lead with Love and Be a Gift. Our team at Tap the Potential is on the lookout in social media for those hashtags, and we will be reposting those social media posts from the Tap the Potential social media. Let's all lead with love, be a gift, and shine bright during these trying times. Stephen, we're excited to have you with us today. We have a very important topic to discuss with you, and that is pricing. And if there is one thing that can have an impact on the quality of life for an entrepreneur and changing the profit in the business, it is getting pricing right. And just as we were talking before we hit the record button, we were talking about the different pressures that business owners are feeling right now in the new normal. So I would love it if you would bring us up to speed, maybe by sharing some stories about your own experience as an entrepreneur, where you learned about the importance of pricing.
Well, you really hit on what I have a strong emotional belief of. The difference between success and failure is getting pricing right. And I've been a CPA for 35 years, and I've started 3 startups. And what I felt myself over the years was pricing is so hard because you're often insecure about the value that you're delivering. And it's hard to be objective about that when you're the widget, when you're delivering that service. And I remember in my early days, I started a CPA firm when I left Ernst & Young at age 28, and I hated it. I loved Ernst & Young, and I loved accounting, and I loved everything. But when I got into my own business, it was so difficult to make money because I undervalued myself. And instead of what I've learned later on is, value's in the eye of beholder, right? What's the most somebody's willing to pay, and what can you demonstrate as the return on investment from your contribution, your value, is really helps you be one of those companies that thrive. And I have created this kind of impact of discounts calculator because I was fascinated to realize that, so fast forward, to now as a GrowthForce, we've got 62 staff, and I've been doing it for 15 years. And I learned over the years that, when a sales rep used to come in and say, I'm in a competitive situation here, right? We need to give them a 10% discount in order to be able to close this deal. And then we'll make it up in after sales or service and referrals and, our branding in the community and the industry or whatever the rationale is. I got people sitting on the bench not working. Let me get the deal in the door so that I can make money and get the cash flow from the deposit check, right? Whatever your rationale is for doing the 10%. And what I did this calculator, I realized that's what causes cash flow problem. That discount, that reduction in your price, all comes out of profits. And it's profits that create cash flow problems, right? In cash flow, free cash flow. Either lack of profits, great cash flow problems, or having a profit. And so once I learned not to say yes to that 10% discount, and then the second part was to have real visibility into the true cost to deliver that work so I can see what's my real profit margin. Everything in our business changed. And as our advisors to small project-based service businesses, everything we did with them changed. And we've got lots of stories of companies that went from cash flow problems and no profits to 7-figure profits in less than a year just by dealing with pricing. So
what is the impact of discounting?
So it depends on your profit margin. If you have a 40% profit margin, right? So, if we do a lot of construction business, and that's kind of a target number, right, that you're looking for. And in any service business, it's going to be 40 to 60%, right? Professional service is going to be in the high end. If you have a 40% profit, gross profit, and you give a 10% discount, you have to sell 33% more sales to generate the same bottom line.
33% more. Wow. Yeah, that's a lot of effort.
It's a lot. And the lower the margin, if you have a 33% margin or a 30% margin, just use a simple example, you have to sell 50% more sales.
You hit it right on the head when you were talking about the emotional connection to the pricing in the beginning. And especially in a home-based service business, you're in front of the client, you want to be their hero, but lacking the confidence to actually price appropriately is seriously damaging. Right. But then I think when you're armed with those figures, like what you were just talking about, I mean, who wants to do 33% more work to make up for a discount?
And here's the best part, right? If you have that 40% margin and you add 10% to your pricing, you can sell 20% less and make the same money. This is how we've seen this with our clients. This is how some businesses, the owner takes Friday off. Right? They can take a month vacation like you have in your book, Sabrina.
Yes.
Because they got pricing right. And they don't, Mike, as you say, they don't have that insecurity of pricing. And what I have learned is I had to let somebody else do the pricing. I had to take somebody who was objective, my finance person, and say, okay, you price the jobs. What do you come up with? And I remember the fees started going up. It's like, well, let's look at your margins. You're not including project managers. You're not including the travel time. You're not including, fully loaded labor costs. I've got a great story. I've got a couple of case studies from clients let us share their data. Otherwise, as a CPA, it's confidential. But I've got a couple that I'm really excited to share. Liberty Pipeline is a pipeline services company, was a pipeline services company in Spring, Texas. These guys came out of Enron. You've heard of Enron?
Oh, yeah.
And they were the smartest guys in the room. They were brilliant. And Enron had some real businesses. Pipeline services was one of them. There was no shaking of the books and the balance sheets with the pipeline services. It was a real business. When that house of cards came down, Alan Weatherford, who's the head of that division, he started Liberty Pipeline in Spring, Texas, and he brought over his management team. It's a construction business, right? They do pipelines. That's basically, they're staffing in the construction industry. And brought over his management team, and he brought over his clients. And he had a $5 or $6 million business right out of the gate. And he had a business model was they needed to make a 20% profit margin. That's what the industry average was.
Whoa.
Yeah, it's very competitive. It's commodity. Their clients are big, giant oil companies, right? They have pricing power. And so basically he had priced his jobs based on, if I'm paying somebody $80,000 in salary, I need to bill them out at $100,000 a year to make 20%. And he made a classic mistake that we see all the time. He forgot about his the burden rate. His salary was not the real cost of his business. He had 28% in taxes, in health insurance, and 401k contributions. And what we really emphasize is, I've been a CPA, had my own firm, board of the Houston Society of CPAs for over a decade, and a proud CPA. But the accounting industry was designed for compliance. Your CPA's job is to help you pay as little in taxes as you legally are allowed to get you through an audit, to make sure the bank is happy. It's designed for external users. That's financial accounting. Management accounting is about internal users. And so what management accounting is really understanding your unit economics, right? The profitability on each job, of each customer, of each product and service that you deliver. And we do QuickBooks, NetSuite, and Xero, and Intuit Payroll and Insperity have automated activity-based costing. What that means is that when somebody fills out a timesheet, whatever timesheet system you use, when you run the payroll, it allocates the labor costs above the line, so you can calculate your direct labor for seeing your gross profit, and you're below the line, your overhead costs. And once we did that, we showed Alan that he had between 8% and 12% margins. He's like, that's not possible. It's in my contract. But he had time leakage. Now, this is the one number that I see all the time. I got another construction company in Ohio, the Dirt Works Chicken Coop. They had time leakage. The owner was looking at the margins, and he was like, how do I have such low margins? It's like, you're not billing for all your work. So he flew up to Ohio to meet with the client and the contractors and figure it out. And he got there, and the guys were at the bottom of the hill with the bulldozers and the backhoes pushing dirt back up the hill. He's like, what are you doing? This is not in scope. We're supposed to be paving the roads for that development up the top of the hill. He goes, there's a big storm last night. All the dirt got washed down, and we can't do our job until we get the dirt back up at the hill. And he's like, well, we got to get paid for that. So both Alan and Ross, those two construction companies, they both found that they had missing costs and time leakage. And those two things alone, if you can create a work order, track the time that you're not getting paid for, and then make sure that your pricing includes the fully loaded labor costs, all that extra pricing goes right into your bottom line, goes right into your bank account. Now,
nice.
So Alan Weatherford went from being cash flow poor, using a factor to pay payroll, and he assumed it's because, Weatherford and KKR paid net 45. Once we changed the pricing, he got rid of the factor. He generated $1 million in profits at the end of 1 year. And he sold the company 3 years later for $10 million because he could show them the real margins.
Wow. So what I hear in that is he was making an assumption that the problem lied elsewhere, that it was the net 45, right? And the data that you were able to provide him helped him make more informed decisions. He was able to see a bigger picture.
Exactly. The emotions came out of it.
Yeah.
How do you suggest entrepreneurs, where would somebody begin to gain that confidence?
So the first thing I would do is, the traditional financial statement is income minus expenses equals profits, right? And if QuickBooks has 88% market share, so I'll just talk about them, but this applies to every accounting system. It comes out of the box in alphabetical order. You got accounting and advertising and bank charges and commissions, and then 3/4 of the way down is payroll taxes and maybe officers' compensation if you want to show that separately. That's the biggest expense in a service business. It's usually 70% when you look at the fully loaded labor costs. Could be higher. What you got to do is you got to separate those costs that are above the line that should be in cost of goods sold. And cost of goods sold only has two parts. Those are the direct costs that the customer directly paid for. It's your direct labor, the people that earned you the work, the billable, the guys working the backhoe and the pushing the bulldozers, and your direct materials, the stuff they had to buy in order to do the job. What you do is you go into the accounting system and you create a cost of goods sold account type instead of an expense type. And what that does is it automatically moves those accounts above the line. And now your reports will show you your income minus your cost of goods sold equals gross profit. And to my mind, your gross profit percentage is the most important number of every financial statement, because that tells you, are you pricing right? And if you know your gross profit on a customer or a job, now then you can go into an accounting system and start adding fields based on the decisions you got to make. Pricing's number one. Number two is which clients should you fire? Which clients should you reprice or change the scope? And then how do you spend money to make money, sales and marketing? And if you see the gross profit of your client, you can go in and add a custom field in the accounting system like lead source, right? We have another case study. Chief Outsiders is a outsourced chief marketing officer. And he wanted to know, he said, can I see the return on investment from my marketing campaigns? Of course, that's the holy grail, right? That's, what everybody liked, that big dollar amount that you put into sales and marketing. Once you see that gross profit percentage by customer, by job, you can go into QuickBooks and add a custom field for whatever decision you're trying to make. In this case, lead source. So we created a lead source field. Now you run the customer profitability report by lead source. You can see who is your most profitable lead source. He sent us an email a couple of years ago in January. He says, hey, I got this bill from one of my sponsorships for 6 figures. And it's January, and we're at partnership. For tax purposes, I distributed the cash out to our 68 partners across the country, so I don't have 6 figures in the bank. I'm going to pass on this sponsorship. Can you guys tell me how much revenue we got from that sponsorship? And we emailed them back, said yes, because we have the profitability of each customer, and we added this custom field. We said yes, but you're asking the wrong question. It's not how much revenue you got, it's how much profit did you earn? And he had the program he was about to give up on was his best one, 4 times better than the next marketing campaign. He's like, oh my God, I almost didn't do this.
Wow.
His gut told him the timing wasn't right. My feeling was I'm going to pass. So by making a data-driven decision, by moving your cost, Mike, above the line into cost of goods sold, you could see the profitability of your work. And that allows you then now slice and dice that profitability by industry, by sales rep, whatever way you want to make decisions.
So, this gets me really excited, Stephen, because as I think about the business owners dealing with the new normal and, loss of revenue, loss of customers from COVID-19 and what we've been through, one of the things I focus on a lot with our clients at Tap the Potential is the pumpkin plan and the sweet spot of the business. And that relies on the 80-20 principle, understanding that 20% of your clients and customers are responsible for 80% of your revenue. And what I think is very intriguing is if we focus on those top 20%, who are responsible for 80% of the revenue, and we set a goal to increase the revenue from that top 20% by 25%, we're at choice. We can get rid of 80% of our clients and customers, or if COVID-19 got rid of them for us, so be it.
Okay.
So we take that and combine that with what you're sharing, and we start breaking it down and looking at the gross profit per job and lead source within that top 20%. Now we're able to get a highly refined analysis of the business and make very strategic decisions about pricing and value. And what I hear and where you started is that it's not just a matter of raise the prices and we're using a lot of construction examples. Construction is a highly competitive industry. So it's about showing the value What, in your experience, what are some different ways to show value that allow a business owner to price to have the margin they need to have good profit?
Well, I think you hit on it, right? By running those profitability reports based on the decision you're trying to make. So in your example, Sabrina, if you want to figure out who are the 20% of the clients, right? Now you can put an industry field in the counting system. And QuickBooks has this. You can have custom fields in there, Xero, NetSuite, any of them have it. Then you can start to get data to tell you who are those 20%. Mm-hmm. And what we have found is the companies that have the largest margin are the ones that you offer the most value to. So you kind of reverse engineer it and say, okay, on these clients that have the highest margin, why are we able to get that margin? Do we have specialized knowledge or business processes? Is there a pain point that's unique for that industry that we're able to solve? Like for us, we do project-based service businesses and nonprofits because this activity-based costing allows you to be able to deliver management accounting that nobody else has. And once you've got that, then you are, to my mind, you're able to also, by having that activity-based costing, to see the details of the work that you're doing, to see the time leakage. Like what we did was we're big fans of T-sheets, right? T-sheets?
Oh, yes. We use it at Tap the Potential. We're big fans.
Isn't it great?
Yes.
And Intuit bought it, so it means it's fully integrated into the QuickBooks ecosystem. And so, when the bulldoze drivers at a chicken coop show up for work, it's got a geofence and it says, you've arrived on site. Do you want to start your clock? And you hit the start the clock. And then the next thing comes up and says, what piece of equipment are you working on? Are you a bulldozer or a backhoe? And then the third one is this part of the job or is this out of scope? Is this a work order? And what that does is it captures that time leakage. And then what the owner was able to do is to go to the home builder and say, here is all the work that the foreman on site has asked us to do that was not included in our bid and we need to get paid. And I remember when he started submitting the reports and we went from a loss in the first 6 months of last year, 2019, to a 22% net income in the last 6 months. And when I met with him, to do year-end planning, he said, and budgeting, I said, how did it work? He said, the home builder said, you're the only subcontractor we have, which explains to me why I'm getting billed. So it's so easy to pay you because it's very clear you're pushing dirt up the hill because of the rainstorm that's out of scope. And so you just get paid for it. And all that extra billing goes right into the bank account, right into the profits.
Yeah, that's the strength definitely is in the clarity. I know from my past too, because I'm a builder by trade. In my younger years, it'd be the same thing, right? I mean, you look at a project, you know that you can do it well, so you minimize the time because you're this superhero builder. So I can get in there and build this in X amount of time. But if I'm not accounting for all of those unknowns and the rain and the extra dirt and going to Home Depot 15 times and all these different things, right? Now all of a sudden I'm slipping. And even if you do have a change order, the client typically gets defensive with a change order. But if you're able to professionally show them the time, the materials, why it's out of scope in great detail with a report, 9 out of 10 times they're going to approve the change order, which like you said, goes right into the profit bucket instead of being taken away in the expense bucket and minimizing your profit.
Yeah, and what's nice about it is the technology just makes it so easy. With T-sheets, tracking time is not the issue that it was. We got a lot of creative industries who was like, oh, we're designers, we're web developers, we don't bill by the hour. It's not about billing, it's about costing, right? Job costing. And Intuit Payroll for desktop has it built in. So if you use Intuit Payroll on QuickBooks Desktop, it's free. You just go into the preference sections of QuickBooks, go down to payroll and check that box that says use timesheets to run payroll, and it automatically allocates the labor based on how the people fill out the timesheets. For QuickBooks Online and desktop, Insperity has it automated, right? They're a PEO and they've got a full integration. All the other payroll companies, there's a workaround. You can do it manually. You do what we call a mock payroll using Intuit Payroll, and no matter how you do it, even if you do it manually, it's a game changer. It gives you management reporting. The other thing I think is really interesting is the other big mistake that we see is clients who think their biggest account is their best account. I got an IT company in New York called Tag One, and Peter Hoyes is the COO, and they had a giant IT company. One of the giants is their client, their biggest client, 40% of their revenue. And they came to us because Insperity actually introduced them to us, and they said, we're struggling with profits and cash flow. Like so many of the people that we see, it's the norm. Small businesses struggle with profits and cash flow. And by seeing the profitability on each job, we were able to show her that your profit margin, your gross profit margin has to pay for overhead and generate a profit. And if you add up all your overhead for the whole year and you divide it by the number of units you've got, might be number of jobs in a construction business, might be number of billable hours in a service business, you can see how much overhead needs to be included in your price to cover your overhead on every job, on every billable hour. And then if you do the same thing and say, all right, if you want to make a 15% profit, which is really what a well-run company should have, how much dollars is that? Divided by the number of billable hours you're going to have in a year, divided by the number of jobs you're going to have in a year. And when you're pricing that job or you're trying to figure out how much billable hours, how much the billing rate is per hour, you're not going to be insecure about saying, okay, I want to bill about at $150 an hour, right, for an engineer, but I'm going to discount it by 10% and go down to $135 if you know that you only have $15 an hour profit baked into your price, because that 10% is all your profit.
Right. So I want to zoom out here and go to bigger picture and talk about the impact of this understanding on the entrepreneur's quality of life. Because what we deal with at Tap the Potential is we have entrepreneurs who come to us who are in a state of burnout. They have been, cranking it out, grinding it out year after year. They have been chasing the eternal grail, holy grail of more revenue. And I've got to increase my revenue. And then at some point, I'm going to hit the magic number and I'm going to have the good life. And it never happens. And we get into conversations. Our first conversation that we have as soon as they start our program is, what are the wins we are going to be celebrating with you in a year? And they start talking about sleeping and days off and time with their family and, having money that they can invest in their retirement accounts and pay for health insurance and whatever. And so we start looking at what is the amount of money that you need to, as the entrepreneur, to have a good quality of life in your personal life and design around that. And the big aha moment that inevitably happens is that understanding it's not about how much you make, it's about how much you keep.
Yes.
And so when going back into the nitty gritty of pricing and margin here, and what you were getting at with the impact of discounting is that when we have the appropriate margin in our pricing, we are able to run a much more simplified, streamlined business. And there is a huge snowball effect. If you have to sell 33% more, that's more time for the entrepreneur. That's more time for the team members. If you are able to operate and not have to do that 33% more, you don't need as many team members. And there's a snowball effect there because, like you said, Stephen, payroll is the biggest expense. Right. And, I write about how to hire the best. And I always tell people, if you can get away without hiring, you absolutely should. Because people introduce complexity into the business. They introduce heartache into the business. I think people bring the biggest heartache for the entrepreneur into the business. So running things on a much more simplified business model has a huge impact on quality of life. In your experience with the entrepreneurs that you've worked with and in your own personal experience, what happens in quality of life when we get pricing right? What do you see?
Everything changes. All the stress level changes. Sales, I have lots of stories of clients who have thought that they will sell their self to profit. I mentioned Tag One. That's a great example. She got to $6 million in revenue, trying to figure out what the right model was, and opened up in new markets, offered new products, hired salespeople, just pulled every lever you could possibly do to grow the top line, feeling like it'll help add to the bottom line, and it doesn't happen. And it just creates bigger problems, right? People and clients. Once we were able to show the real impact of changing the price on that biggest client, it took 6 months, by the way, because of fear, right? What happens What happens if they say no? I can't afford to lose my biggest client. That's 40% of our revenue. I need the cash flow. And what we had to do was to show her, if they said no and you kept the other 60%, but that was profit margin at 50% margin, as opposed to 28% margin on the big one, you'd actually make more money because that big account wasn't covering its relative share of the overhead. Never mind not generating a profit. If those billable hours there wasn't enough margin to just pay for the rent. So we're draining the other 60% of the client's profits to cover the big technology company's rent. After they got comfortable with, okay, if we lose them, we'll actually be better off, just like you say, the 80-20 rule, then they went back to them and they said, look, here's all the out of scope work. The scope creep. Why do we have scope creep in a service business? Because we hire servants, right? I'm a servant. I love serving my clients. My staff get a dopamine charge when a client calls up and says, hey, can you generate a new report? Can you change the QuickBooks system? Can you? There's like, yes, I'm going to make you happy. That's going to make my boss happy and everybody's going to be happy. No, that's a work order. That's a change order. I'm happy to do it, but it's 3 hours of work. That small mindset shift changed everything. And in Liberty Pipeline's case, every one of their clients agreed to their fees. And in Tag One's, giant technology company agreed to their fees because they do such good work. And people, they make decisions based on risk avoidance. You're not going to risk starting over with another vendor if the vendor you have is really good, even if they come back and say, look, I got to charge you 18% more, or I need to lower the scope of services to stay in your budget. And if not, I need to transition you to another service provider. The big technology company agreed to their fees and they were so giddy by the fact that it worked, they went back to all of their clients and they increased all of their fees and they lost none of their fees because they could, as Mike said earlier, they could show them the details of what the scope was and what is out of scope, the time leakage. They made $1.5 million in profits last year. Their whole world changed. Their life changed. Their emotional state changed. Their employees got bonuses. They got better health insurance. That means their communities are better served because they're happier members of society. This is to me is the way you change the American dream, is just helping people get the pricing right.
I can't agree more. And what I picked up on is you said fear. Fear was keeping them serving that very large client. And the question was, what if I lose them? I think a better question in that case is, what if you can't afford to keep them?
Right.
True.
Right now with this global recession that we're entering, my advice to clients and prospects and friends and colleagues is, whatever you do, don't discount your services right now. Don't come from a position of fear. You have to have an attitude of gratitude. Somehow you have to find a feeling. I'm from New York and my first cousin is a nurse in an emergency room in Queens. And so for the last, 2 months, I've been hearing, weekly stories about people strapped to ventilators and morgues outside of the building and trucks filled. And so, my message to everyone is, if you're not stricken by COVID-19, then you got to feel blessed. You got to start from a feeling of abundance. Mm-hmm. And that mental shift is the difference. If you're not, and it's easy to be insecure right now, right? Nobody's buying. So once the PPP money ran out, what do we do? And, first you have to make data-driven decisions. We got a break-even calculator that will help you figure out, if I lose 20% of revenue, what do I do? If I lose 40% of revenue, what do I do? And once you've got that data, then with the right sizing of your business, being able to have the confidence to say, here's our value. And if you start offering discounts just to keep your people busy, you're going to go down a downward cycle of cash flow shortages that can be almost you can't get out of it. This is why small businesses in America fail. It's cash flow, and it's cash flow. And pricing and discounts on your pricing is what causes cash flow. So now's not the time to discount. Now's the time to dig into those costs and explain your value. And like you say, find the 20% of the clients where you offer the most value, that you're going to be better than everybody else.
And I just want to point out something that our listeners may not be aware of, but the three of us in this conversation right now who are speaking to mindset, attitude of gratitude, don't get into fear, don't discount, we are all three in the hotbeds of COVID-19. You're in New York, Stephen, Mike's in New Jersey, I'm in Louisiana. And we are sending this very strong message out there that we have to surround ourselves with people who have a positive mindset, who are looking for growth, and we have to keep our head in the right place as we make these decisions, these very impactful decisions in our businesses. So I really appreciate what you're sharing about your cousin and that experience.
Yeah, I'm in Houston now. I sold my business came to Houston with the acquisition, but yeah, I'm for 41 years in New York, and all my family and network is there. It's critical to, right now, you can't make decisions based on emotions. Mm-hmm. You've got to make them based on data. You have to see what is your real costs. What is your real gross profit? What is that going to look like if you lose 20% or you lose 30%? And recognize this will pass, right? This is my 6th recession. I've been a CPA for 35 years. And what I've learned over those years and watched the clients, as a CPA, you see the books, right? You see the numbers. And over in the early days, it was like, holy crap, the sky is flying. What do we do? And discounting, just to get the deal was the first trigger. Now, much later is you're better off taking those people that are not busy and working on sharpening the saw. Work on your processes, work on the job costing and the labor allocations, work on automating your billing and collections. We're big fans of Intuit Payment Solutions. It automates the billing, the collections, and the cash application. I've been on the AICPA Executive Roundtable, and there is an aggressive move to automate the entire bookkeeping process right now. Bill.com is a bill payment service on your phone that syncs with all the accounting system. It lowered our cost to write a check by 87%, from $12 to $1.50 per check, just by automating it. So I wouldn't discount, I would focus on getting better.
Yep.
Bettering our best and working on the business. Okay, Stephen, how can our listeners get in contact with you?
So it's www.growthforce.com. That's GROWTH force.com. And we've got a button at the top where it's got COVID resources that are really evergreen. And we've got in there, what do you do if you're in survival mode? Resources for cash flow and forecasting and how do you cut costs? Restructuring mode, what do you do to figure out how to make the difficult decisions that will enable you to come out of this stronger? And then strengthening mode, what are the things you should be doing? What are the tools, calculators, talk tracks, videos, ebooks to help you come out of this stronger? I'm also on LinkedIn at Stephen, STEPHEN King, CPA, and Twitter at SKingGForce. My email is Stephen, STEPHEN at growthforce.com.
Thank you. Those are some excellent resources. I think our listeners are really going to appreciate what you're sharing with us. Mike, do you have any final thoughts as we wrap up today?
One of my big takeaways for sure, just reiterating everything again, but I would say now more important than ever is definitely to find the right clients to work with. Don't work with any crappy ones. Keep the pricing, hold the pricing strong. And even if you have to raise it in some instances, raise it. Now's the time to do it. And echoing what Stephen said for sure, utilize all this time to restart, work on efficiencies, strategies, processes, get better, look at ways to, cut some costs and maybe create that efficiency to make back some of that money, but really just stick true to a profitable business.
Excellent. Thank you. Thank you, Stephen. This has been a very enlightening and inspiring conversation. I appreciate your wisdom that you're sharing with us.
My pleasure.
Thank you.
If you're like most business owners, you have a cash-sucking business that's taking over your life. After the first year in our Better Business, Better Life program at Tap the Potential, you'll have more time for what matters to you and more money in your bank account than you've ever had. Get started. Take our assessment at tapthepotential.com/assessment. Thank you for spending time with us today. Join our conversation in the Profit by Design podcast Facebook group. Share your thoughts on today's episode, ask us questions, and let us know what you want to hear about next. Visit our website at profitbydesignpodcast.com to access resources from our sponsors and tools we've created for you. Subscribe to the show on whatever platform you're listening to right now. There's a subscribe button right there. Go ahead and hit it so that you always get a notification when we release a new episode. And finally, share our podcast with a friend if you know a friend who would enjoy it. Thanks again for listening. This is real life business. Keep your chin up, keep moving forward. You got this.